So on this sell opportunity, you had the opportunity for 86 pips. On this buy, there was an opportunity to trail this for over 148 pips on crude oil. Hey everyone, the professor here, and in today's video, I'm going to give you some massive value to help you, even if you're busy and trying to juggle work and family and life. This strategy today is going to make a difference in trading crude oil for you. And then at the end of the video, I'm going to run through my Sunday market analysis for crude oil so we are ready for market open or for the first 48 hours of the market. So, are you ready? Let's get started. So, as for me, a little background, I've been teaching college business courses for over 15 years, both graduate and undergraduate. And about 8 years ago, I started my journey as an investor and trader. And I struggled for 3 years. I did many of the same mistakes that many of you are still making. But when I got into the right community, when I got the right mentor, I was able to turn that around to become a six-figure trader. And now my main purpose in life is just to be able to give back and help people learn from my struggles so you can become profitable much, much faster. Okay, so I'm going to walk you through the strategy. I'm going to show you how to install these two indicators on your chart. And then I'm going to give you a couple of examples. And then at the end, we're going to get into the full crude oil analysis. Okay, so the first thing you need to do is head up to the indicators tab on TradingView. And what you want to do is you want to start typing in PAR for Parabolic SAR. So it should look something like this. And you want to go ahead and click on that. And I've already got it installed. So I'm going to just close this window. And then the next thing you want to do is go back to indicators and start typing in MOVING for moving. And you want to pick this one right here, moving average simple. As a matter of fact, I'm going to make it a favorite. And then you want to click on that. Once you do that, they are going to be installed here in the upper left-hand side of your chart. Okay. Now I want to go ahead and get rid of this one since I already have one installed. So what I want you to do now is I'm going to first turn on the Parabolic SAR. Now I've made some changes to this strategy for those of you that are working, for those of you that can only sit down maybe for an hour a day. This is going to be a great way for you to find entries. What I want you to do is I want you to go over to the settings. Now, what I've done for my traditional SAR setting, this is a very fast-paced setting. So what I want you to do is here, I want you to make sure that this says 0.1 on the increment. It should also be 0.1. And on the max value, it should also be 0.1. Now, when it comes to your style, again, you can change this to your favorite color. I always like the circles, but again, you have a whole list here of what you can change. And if you want to change the colors, you can do that here as well. Just because I'm working with a dark background, I'm going to go ahead and keep the SAR, and I'm actually going to change it to this green color that I like. When you have the settings that you want, you can click on it here and you can click on OK. So now we have our fast-paced Parabolic SAR setting. The next thing you want to do is head over to this SMA that was installed. Okay, I'm going to show it to you here. And what you want to do is you want to go to the setting and you want to first go to the inputs. Now, what you want to do is you want to make sure that your length is at 9, your source is close, you leave the offset at 0, the method should be SMA. Again, the length here should be a 5, and then this should say chart right here. Okay, and then this is very important down here. You want to make sure that this is checked. Wait for time frame closes. When you have that, you are going to click on OK. So now I'm going to start explaining the strategy. I'm going to give you these two examples here, and then we will take a look at a couple other examples. So what I want you to really do here is just pay attention to what I say and the actions that are needed to enter this trade. This is going to be very, very simple, but I want you to listen in to the two main requirements that you need to be able to be profitable with this very simple strategy. Okay, so if you notice, I am currently using the WTI light sweet crude oil futures chart. And for this strategy, I want you to be on the 5-minute chart. So this is a little bit faster pace, but I designed this for people that are busy and don't have the time to be trading for more than 2 or 3 hours. They have a specific time frame, so they're going to look for maybe one entry on this. Now, one of the key components of this strategy, because you are working on a 5-minute time frame, is to look for a take profit of 10 pips. Okay, 10 pips or 10 clicks or ticks if you're trading this on futures. Now, you're going to have the opportunity to trail that for a lot more than 10, but I want to be able to help you secure 10 pips or ticks, because if you do this 2 or 3 times a day, that is going to add up to all that you need to trade to be profitable each and every day. So as we go back into the chart, we want to make sure that we are sitting on the 5-minute chart. So let's go over this first scenario here. Number one is you can see that now we have a very fast SAR. So we're at the 0.01 setting, unlike the traditional SAR that we normally trade with the 0.05. So that is clue number one, that you are going to look for a buy position when the first parabolic SAR appears at the bottom. Clue number two is going to be that you have a candle that closes above the 9 smooth moving average. So in this case, that would have been this particular candle right here. So at this point, this setup becomes very simple. This becomes your entry. And let me grab a long right here. Your original stop loss will become the first SAR. And again, if you're looking at support and resistance, your goal is to be able to take this as high as you can. And sometimes using these measurement tools help you by looking to the left and looking at the most recent high, which is up in this area, or you can even target this high right in here. Now, another way to do this without using the long form here is for you to kind of manually say, okay, this is my entry, and put a green line. Then head to the bottom and put in your stop loss, which is going to be the first parabolic SAR. Now, what you want to do is, as you continuously see these SARs rolling up, you should be able to stay in your trade. Now, again, the initial goal for this 5-minute strategy is that you secure 10 pips. Okay. So if you look at right here, we are now at 10 pips. So you can see that this was a very fast trade, lasted no more than 5 minutes, and you have your 10 pips. So the next thing you want to look at is this. How do you manage your trade? In this particular example, let me give you a couple of ways that you can manage this trade so you can continue catching pips as price continues to climb. So you have your 9 moving average, right? So one possible exit could be that the moment that price closes below the moving average, you exit position number one. Because in this particular case, if you notice right here, let me grab an arrow, you now have the first parabolic SAR to the top side because structure was broken at the top point. So that could be your exit. The SAR could be your exit. But again, you should be trailing your trade from the moment you got in to where you eventually are going to get out. At this point, we're at about 25 pips. Okay. So you should be moving that stop loss into what I call stop profit along the way, or just settle at catching 10 pips or trailing this over and over. Okay. Because the goal of this simple strategy is to be able to make you quick profits, especially for those of you that are very, very busy. Or if you're not too busy, then learn to trail this to maximize your profit potential. So in this scenario, these would be 2 ways that you could exit. The first SAR appears in the opposite direction, which also will mean that the candle is now beginning and closed at that particular 9 moving average or just below it. But the main goal was to secure 10 pips or more. And so that was done in this scenario. And again, if we just move this chart down, you can see here that with a little time and a little patience, as you see these SARs moving up, this would then give you your next potential entry. Why? Because we had the parabolic SAR reappear to the bottom. We now had a brand new candle close above the 9 moving average. And so now we're looking at a new entry for position number 2 here. Your stop loss becomes the brand new first SAR underneath this candle. And now you are looking to grab another 10 pips or more, which in this case would have been here basically 10 minutes later. So in this buy scenario, it's going to give you a couple of different opportunities where you could have gotten in to maximize. So imagine that you're busy. You jump into that first position and you secure 20. And then let's just say that you set your take profit for those 10 pips. Then you notice in the chart that price comes down, but then gives you another SAR to the bottom with the candle closing above the 9 moving average, and you enter a second time. So within about 30 minutes, you now have 2 entries. You've secured your 20 pips for the day, and that is part of our 20 pip challenge that we do inside of our community each and every day. And you are done trading for the day in about 30 to 40 minutes worth of time. Hey, by the way, if you're getting value so far, hit that like button. If you're brand new, subscribe and share this video with your trading community. Now, for this second position, you had the opportunity to trail this because there was no evidence that price was going to drop. This particular 5-minute candle never closed below and also had no SAR to the top. So as the SARs are moving to the top side, right, your first clue to close this trade would have been this particular SAR that was created right here because this candle closed below the 9 moving average. So by then, had you been trailing this second opportunity, you would have been sitting somewhere near between 70 and 80 pips, depending on when you decided to close your trade. So a very powerful strategy on the 5-minute with that first buy example off a SAR and one 5-minute candle closing above the 9 smooth moving average. So now let's jump over back into the chart and let's take a look that shortly thereafter, we then had an opportunity now to change the mindset and to go short. Why did we go short? Number one is we had our first clue, which was the SAR appearing to the top side. And the second clue was the candle closing below the 9 moving average. So again, at this point, we are going to follow the strategy. We initially start with entry here at the closure of the SAR. We are going to put our stop loss above the very first SAR. And our goal is that we are going to look for 10 pips profit. So in this particular case, we had a minor retracement back up to the moving average, okay, and then price began to fall. So right within this one next red candle, there was an opportunity for 16 pips, okay? So you've now secured another 10 plus pips just a few minutes later on this downward momentum. Again, we are still on the 5-minute chart. So your window of trading doesn't need to be hours. You can really condense that window of trading when you start looking for moves like this. So if you continued this trade, because again, we are looking at the parabolic SARs staying to the top side. We never had any evidence of a SAR flip to the bottom, and we never had any candle close below, in this case, above the 9 moving average, right? That eventually happened all the way down here. So that being the case, if you would have trailed this particular trade, you had the potential to secure somewhere between 37 to about 50 pips, depending on when you decided to exit this trade. So we've had a couple of scenarios where you've seen how to use this strategy on a 5-minute chart on the upswing, okay, on a buy situation or a long situation, and then how to use it on a sell situation or a short situation. And I just want to walk through the chart. We're about to get into the analysis in just a few minutes. But again, I just want you to walk through this chart so you can see the various opportunities that this strategy on either side would have yielded results for you, especially when you're just looking for 10 pips at a time. You can sit on this 5-minute chart and you would be profitable with almost every entry. Now, like anything else, there are times of the day that you should not be trading because crude oil, like many other pairs and commodities, gets very choppy. Okay, so in my opinion, this is a massive strategy for maybe 30 minutes right before the London session starts. And then starting at 8 a.m. Eastern time, which is pre-US session, you're going to find these moves happening all the way until about 11:30 a.m. Eastern Standard Time. And again, this is something that we talk about in our community all the time. We have specific trading hours so you don't get jammed up in these sessions that are very choppy. So we define those hours and we focus our efforts to trade within those hours, whether you're a London trader, whether you're a US session trader, whether you trade both. But there's other sessions that it's not worth trading. And late in the day in the US session, once the European banks have closed, can get very tricky for many people and can get very choppy. So I always tell our community members, hey, after 12 noon, we no longer enter any brand new trades so you don't get trapped. We wait for the daily markets to close, and then we just rinse and repeat each and every day. So I hope you got some massive value with that 5-minute tutorial to really help folks that don't have a lot of time to spend in front of the charts. Again, working, balancing life, family. I understand that. We have many of our community members who are just like that. And so that's why I'm sharing these little strategies with them as well, so they can maximize their time of trading to be able to do something else that they love to do as well. So now we are going to go ahead and get into our full crude oil analysis. Okay, so we are starting out on the monthly chart. And again, I want you to focus in that we are using WTI light sweet crude oil futures chart for this analysis. The price action should mirror your chart. But again, I always caution you to make sure that you are looking at your charts as well. Okay, so right now we are sitting on a red monthly candle. We can see here that we've had price has been retracing since about 76.46 or so. So keeping that there, we are now going to jump over into the weekly chart. And again, there is the retracement that we just talked about when it comes to the monthly chart. And that's why it's so important to do a multi time frame analysis so you can look at perspectives from the bigger time frames, because this is where institutional money is trading. Okay, so let's first go ahead and draw a quick fib level, and let's see where we are at from this swing low or swing high to swing low here. I like to get perspective, as we do every week, where we kind of are sitting on the weekly chart. And the first thing that stands out to me is that this is a very big liquidity candle, right? How far up they're going to come to grab liquidity, we do not know yet, but they usually like to grab, if not the whole thing, at least 50 to 80% before they retrace back down. So this is going to be a very key level to kind of focus in on that, because that also mirrors, right, kind of like that area that we like to trade in our group, which is between the 61 and the 88, which would also be about 80% liquidity of that candle. So I'm going to leave that there for now, and we are then going to jump into our daily time frame, because again, here now we begin to look at price action from a little bit different angle. Also, when you do your Fibonacci's correctly, okay, they also align with good areas of support and resistance. Okay, we're going to draw some support and resistance here in just a minute. So the first thing that should stand out to you is that our day candle, which was last Friday, did close above these candles right here. Okay, so that we are now, in my opinion, we've broken this Fibonacci level or zone, and we appear to be heading up to the next level. Okay, because this daily candle did close. Okay, did close. I'm going to make this white real quick. Did close. Okay, above these candles right in here. Okay, so very, very interesting to know that even though on that monthly we're in a retracement, right, we can see here now as we get to the smaller time frames that we are definitely in this pattern of possibly going higher. So now I want to really focus in on the day time frame. This is where I like to really establish the fib levels starting at the day time frame versus the weekly, because I'm an intraday trader. Our group is intraday traders for the most part, so we want to look at these areas. Now, the one thing that did kind of get very close to the weekly was this liquidity zone right in here, and also our area that we look for these levels. Okay, so I'm going to kind of leave that right here. Let's close this up a little bit. Let's bring this over. Okay, this is that area that we try to get pricing at a cheap discount. Okay, so if we look at this candle, right, we see that there is still a lot of liquidity here to grab. They've only grabbed about 20% or so. So this is why we're expecting price to come up higher to these levels up in here because of that candle. So based on my initial view of crude oil right now, we should be thinking bullish moves with any retracement because of those liquidity levels. And again, we don't know if any gaps are going to happen, and we'll talk about that in just a little bit. So we're going to be looking at this area to see how price reacts. And we're going to actually make that yellow so it looks better on the dark background. So we are definitely bullish at this point based on price action. Okay. So next thing I want to do is I want to go ahead and just kind of show you with the SAR setting. Okay. As we are in this day chart that we now have the aggressive SARs to the bottom. You can see two right in here. Okay, let me move this fib level so you can kind of take a look. Here are the two SARs that have been kind of created on the bottom level. So we have that good confirmation that a structure point has been broken. Okay. And again, these are still the 0-1 SARs. So for this type of trading, I like to go back and I like to change this back to my original SAR of the 0.5. You're going to see how that's going to make a little tweak into the actual SARs in this case. And that's because we get a little bit more aggressive here with our first SAR as our first indication that price may begin to go back up to the top side. Okay, so now I'm going to go ahead and just close these real quick, close that up, and now we begin to look at the 8-hour time frame. Okay, so as we zoom in, right, we can clearly see here that these fib extensions are basically good areas of support and resistance as well. So we like to look for these levels, and that's why if you get to the point where you draw some good fib levels, you can see some nice bounces in those areas as well. And I'm going to draw one more here at the midway point, because that is going to be a level. So these are going to be our levels. If you need to pause this video, you've got the levels over here on the right. I'll read them out real quick to you for those of you that might be on smaller devices. The next level to the top side that we should be hitting will be 80.24. The next level above that is 81.20. The next level above that is 82.19. And this high level up here is 83.24. So we're going to trade what we see, not what we think, but we should be climbing to that 80, 24, 80, 50 level early this particular week. Okay. So now that we can kind of see the price action, again, we do see here that on the 8-hour chart, price rejected this area. So you can see how on the day chart, we closed above a key level, but as we zoom in here, now on the 8-hour chart, we've seen this previous rejection happen here, and before we closed on Friday, we rejected this 79.60-ish area. So we are going to have to close above this level right here if we're going to jump up to 80.25. Okay, so that's going to be very important that we close up in this level, and I'll leave that there for now if we're going to go to the next level, because every time we've come here, we've seen rejection down, we've seen rejection down. Will we get that rejection down, or are we breaking this level and heading back up to the top side? Okay, so those are things that we have to look from an 8-hour standpoint. And if we do an inverted Fibonacci from this low to this high, assuming now that we are going to reject that level, then we start looking for price to bounce one more time near this 61 level here to see if then we can take price back up to the next level, to the top side. Okay, so this will be determined on what happens with price action very early. This will probably be established between Sunday market open and Monday, or London session Sunday going into Monday. So now let's take a quick look at the 4-hour view. There, here you can see the first 4-hour rejection. And again, this is why I encourage all of our members to, even though we do this for them, and I'm giving them live charts every day in the community, in the chat, and we have traders sharing their charts. That's why our community is so amazing, that we can begin to see this early on, and you can begin to realize, wait a minute, let me not jump into a buy here because maybe I missed that there was rejection here. And this is why trading, in a community is so much better, because trading is hard. Don't let anyone tell you that. But trading alone is even harder. So if you surround yourself with like-minded people, people who truly care about your interest and well-being and growth, not just as a trader, but as a human being as well. And that's so important to me as well. That's why we're seeing such massive success in our community. Not bragging, but why my retention rate is over 92%, because we're doing a lot more than just focusing in on trading. We're focusing in on your mental wellness, which is important for trading. We talk about physical health, which is important for trading. So it's really a community of people who are looking to just grow as people, not just traders. So again, we invite you to come in and check it out for 30 days. You got nothing to lose. For less than $1 a day, come in and see the massive value. And I guarantee you, you're going to want to stay home because you found your brand new home. Okay, so let's get back into the chart here. So we are going to definitely have to wait to see how price reacts at this key level. Okay, this is going to be, and I'm going to just put another yellow line because this is going to be a key level. If we close above this level, then we easily know where we're going, and that's going to be the level right here, because we trade level to level. Okay, we trade level to level. And when we add our little SAR confirmation, we can see we've already got SAR to the bottom, but we need to see what happens here at this particular key level. And if we're just looking under the tutorial I showed you earlier, even though that should be a nice 5-minute scalp, we could clearly see here that we have crossed over the fast 9 smooth moving average. So we are going to begin to end this video by looking at the 1-hour chart. And then this is going to be our gap. So basically, we talk about it every weekend, where price closes on Friday. It is here. And so wherever price opens on Sunday, the difference between that price will create a gap. So in this scenario, right, I want to kind of give you a couple of scenarios. Now, if you want to trade with us live on Sundays, we do a live gap analysis, not only for crude oil, but we do it for all the indices as well. Again, that's part of getting full access into our community. So if we gap up in this particular case, and what we're looking to do is price will usually run away for a while. Let me get rid of these arrows. Price will usually run away for a bit, hit some type of major level, and then eventually come back to close the gap. If we close down here somewhere, okay, we'll make this red, vice versa. Price will like to usually, run away for a little bit. So that's why we don't jump on it right when the market opens. And then we get our best price possible, and then we take that back up to the gap. And again, as we always talk about each and every week, gap trades in many cases do not close within seconds or minutes like they used to. Now they're taking sometimes hours or even into the next session to close. So you don't want to over leverage any possible gap trade that you get into. And my personal rule for a crude oil gap has to meet my threshold of being open at least 50 points or more. If not, it's really not worth it. So once it gets to that 50-point level, if it does, because they don't always gap every Sunday, or they just gap a few points and then it closes right away. But if we have a gap of 50 points or more, we begin to jump position number one. We have an entire strategy that I'll share with you in the community on how to 2x, 3x your profits by actually using smaller lot sizes. Okay, so that's the strategy that we employ when it comes to the gap. So overall, we are beginning the week probably bullish on crude oil. Again, we're going to be looking for these key levels. But again, if you're a member in the community, you don't need to worry because, as you know, we are providing charts and analysis. So we're updating you as price is moving as well. Hey, I hope you got some value on today's video. I hope you try that strategy at the beginning of the video, whether you are pressed for time or you have time, and see if it works for you. If it does, go down into the video comments and let me know what your results are, because I always love hearing feedback from people that are typing in saying, hey, this works. This is awesome. I caught X amount of pips or X amount of ticks on futures. I definitely want to hear your success stories. And if you're struggling with it, send me a message as a comment as well. I'll get to you, and maybe I'll even invite you to a free personal 15-minute coaching call as well. So thank you for watching. If you reached the end of this video, I want you to type in light sweet oil in the comments below. Light sweet oil or just sweet oil, so I can shout you out for actually staying and watching the entire video. Have a great week trading. Don't forget to be kind to someone this week. It could be a stranger, it could be a loved one, it could be a family member. Kindness spreads, and we need more kindness in this world. So random acts of kindness go a long way. Never expecting to be returned back to you. Just do them because you actually want to do something nice and not expect anything in return. And there's a way that the world rewards you for those acts of kindness, whether it's through your faith, or just through karma, as some people will say. I'm big on the faith piece. So I believe that is what we are called to do if you are a person of faith. Thanks for watching and have a great week.